Ever found yourself eyeing that perfect car, the one that just clicks, only to have the nagging thought creep in, will my credit even let me get close to it? You're not alone. For many, the dream of a new or used vehicle bumps squarely against the reality of their credit score. And when you start exploring financing options, a name that often pops up is Ally. But the big question, the one that keeps you up at night, is this: does Ally approve bad credit? That's what we're diving deep into today. Forget the generic welcome to the channel. We're cutting straight to the heart of the matter because if you're searching for this answer, you need real information, not fluff. Let's set the stage. The world of auto financing can feel like a maze, especially when your credit history isn't sparkling. Traditional banks and credit unions often have stringent requirements, leaving those with lower credit scores feeling like they're locked out. This is where companies like Ally come into the picture. They operate in a slightly different space, often working directly with dealerships to provide financing solutions. This model can open doors for a wider range of credit profiles, but it's crucial to understand the nuances. Now, let's be crystal clear, there's no magic wand in auto financing. No lender, including Ally, throws caution completely to the wind and approves every single loan application, regardless of credit history. Responsible lending practices mean assessing risk, and credit score is a significant factor in that assessment. However, the question isn't a simple yes or no. It's more about understanding to what extent and under what conditions Ally might work with individuals who have less than perfect credit. One key aspect to consider is the spectrum of bad credit. A credit score of 640 is vastly different from a score of 500. Lenders categorize credit scores into different tiers, and their appetite for risk varies across these tiers. Someone with a fair credit score, typically in the mid-600s, will likely have more options than someone with a poor or very poor score, below 580. Ally, known for its partnerships with dealerships, often has a broader lending range than some traditional institutions. They understand that many factors beyond just a credit score can indicate a borrower's ability to repay a loan. This is where things get interesting. So, what factors might Ally consider if your credit isn't stellar? 1. The down payment. This is a big one. A substantial down payment can significantly mitigate the lender's risk. If you're putting down a larger chunk of the vehicle's price, you're borrowing less money, which makes the loan less risky for Ally. It shows you're serious and have some financial stake in the purchase. 2. Income and employment history. Lenders want to see a stable and reliable source of income. Consistent employment over time demonstrates your ability to meet your monthly payments. Ally will likely scrutinize your income, employment history, and proof of income. 3. Debt-to-income ratio, DTI. This ratio compares your monthly debt payments to your gross monthly income. A lower DTI suggests you have more disposable income available to handle a car payment. Ally will assess your existing financial obligations to determine if you can comfortably afford the new loan. 4. The vehicle itself. The type and price of the vehicle you're looking to finance can also play a role. A less expensive vehicle might be easier to finance, even with bad credit, as the loan amount is lower. 5. Loan term. While it might be tempting to stretch out a loan term to get a lower monthly payment, this can actually increase the overall interest you pay and might not always be favorable to the lender, especially with a higher risk borrower. However, in some cases, a slightly longer term could make the difference in getting approved. 6. Cosigner. If you have a friend or family member with good credit who is willing to cosign the loan, this can significantly increase your chances of approval. The cosigner essentially agrees to be responsible for the loan if you default. 7. Relationship with the dealership. Since Ally often works through dealerships, the dealership's relationship with Ally and their willingness to work with you can sometimes be a factor. Now, let's talk about what you can expect if Ally does approve you with bad credit. It's crucial to be prepared for potentially less favorable loan terms. This typically means higher interest rates. This is almost a certainty. Lenders offset the increased risk of lending to someone with bad credit by charging higher interest rates. This means you'll end up paying more for the car over the life of the loan. Stricter loan terms. You might face stricter requirements regarding payment schedules or other loan conditions. potentially limited vehicle options. Depending on the severity of your bad credit, you might have fewer choices in terms of the type or price of vehicle you can finance. The importance of shopping around. Even if a dealership suggests Ally as an option, it's absolutely vital to shop around and explore other financing possibilities. Don't settle for the first offer you receive. Check with credit unions, online lenders, and even consider working on improving your credit score before making a purchase if time allows. Improving your credit score. While you might need a car now, it's always a good idea to understand how your credit score impacts your borrowing power. Taking steps to improve your credit score, such as paying bills on time, reducing your credit utilization, and correcting any errors on your credit report, can lead to significantly better loan terms in the future. Predatory lending. Be extremely cautious of lenders who offer seemingly too good to be true deals, especially if you have bad credit. High-interest loans with unfavorable terms can trap you in a cycle of debt. Always read the fine print and understand the total cost of the loan. So, to circle back to our main question, does Ally approve bad credit? The answer is a nuanced "it's possible, but not guaranteed," and comes with caveats. Ally, with its dealership-focused approach, may be more willing to work with a wider range of credit profiles than some traditional lenders. However, they will still assess risk based on factors beyond just your credit score, such as your down payment, income, and debt-to-income ratio. If you have bad credit and are considering financing through Ally, be prepared for potentially higher interest rates and less favorable terms. It's crucial to be realistic about your options, shop around for the best possible deal, and understand the long-term financial implications of the loan. Ultimately, while Ally might offer a pathway to vehicle ownership for individuals with less than perfect credit, it's not a guaranteed solution. A strong financial foundation, including a solid down payment and stable income, will significantly increase your chances of approval and help you secure more favorable loan terms. With that said, thanks for watching, and until next time.